Alright guys, so let's get this started. So the reason why I'm making this webinar is because last week I talked a lot about Bitcoin futures and how they're going to change the game. And there's a couple things that Bitcoin futures are going to do to the price of Bitcoin that's very, very important for you guys to understand. Whoever is, of course, interested either in trading or investing in Bitcoin, and how that's going to affect it. So let's get started. So Chicago Board of Options Exchange decided to start trading Bitcoin starting December 10, which I believe was Sunday. So for those of you guys who are interested in trading futures versus the actual underlying Bitcoin, there's a couple I guess you could say positives about it. One, you are able to trade in the I guess you could say more of a regulated exchange, an exchange that has more backing in case of something bad happening to Bitcoin. For example, if you trade directly with Bitcoin, there are some security issues like getting hacked, et cetera, et cetera. And once you lose your Bitcoin, that's it, you lose it. But trading the futures contract, it is actually settled in cash. So if you buy one futures contract in Bitcoin, it's actually equivalent to one Bitcoin. So one futures contract is equivalent to one Bitcoin. So it's a 1-to-1 ratio. So it's like literally buying one Bitcoin in the market. Now, the advantage of buying a futures contract versus buy one direct Bitcoin is that you have leverage. You don't have to use as much. You don't need to have as much money in the bank account in order to buy one Bitcoin. So, for example, if you were to go to Gemini Exchange or to Coinbase, a GDAX exchange, right now Bitcoin is trading. Let me take a look at it really quick. Bitcoin right now is trading around $17,200. So if you want to buy Bitcoin right now in the exchange, either Gemini or GDAX, you have to pay around $17,200 for one Bitcoin. Now, on the other hand, if you were to buy Bitcoin on the futures market, you actually only need around 44% of that, so around $9,000. That's all you need. And I know it sounds crazy, so you don't really need to have all the $17,000. So you could have as much, I guess, leverage as one Bitcoin. So if the price of Bitcoin goes up to up 10%, you still make that 10% on one Bitcoin, but you don't need to have all that $17,000 in your account to take advantage of that move. And I do, and actually I started using paper money, using Thinkorswim to kind of show that. So I do have paper money right here. I'm actually trading it right now. And this is just practicing how to trade Bitcoin futures. But I actually bought here, and right now it's moving. So I'm actually up a couple $100. And I want to show you guys something really quick, right? So right now, let me see my monitoring account. I'm gonna take some profit. Now again, this is just simulated trading, so it's not real money, but it kind of helps. I guess you could say. And let me see. Helps you understand. How the differences between one Bitcoin in the actual market versus trading one futures contract one futures contract on Bitcoin. So let me get rid of two. So let me see. So I'm actually trading here live. Now this is real data right now, and I just so you guys know, Bitcoin trades. They trade 24 hours, 7 days a week. Now the Bitcoin futures trade different hours, and I'll show you guys that right now. But I wanna close two. There you go. right, so that's filled. All right, it's good. All right, because I have three big futures, 3 contracts in futures, Bitcoin. Excuse me, I had 3 Bitcoin futures, and I wanted just to have one, so you guys could see the difference between buying one Bitcoin and the Gemini or GDEX exchange versus trading futures. So, all right, so right now I have one Bitcoin, one futures contract in Bitcoin. Now, again, one futures contract in Bitcoin is equal to 1 Bitcoin in the Gemini or GDEX exchange. Now, the only difference is I do not need to have all 17,250 $250 in order to buy that 1 Bitcoin. I actually only need around $7,500, which is very nice, and I still get the same amount of move if I were to have the whole Bitcoin. So that's the advantage of having trading futures. You get leverage, and you're also able to short it and do all these other cool stuff with it. But I just want to bring that up. Now, I do apologize if I do sound, my voice is a little weird. I do have the flu, so bear with me, and I'm gonna explain this in full detail. So think about that. You know, you only need like 44% in terms of buying power to buy it. Now, to short it, it's a little bit different. To short it, it's absolutely different, and it depends on broker to broker. Now, I do use interactive brokers. I actually use Thinkorswim or TD Ameritrade for my sharding, and also to kind of simulate trading before I actually start using real money to practice some of my setups. And for things like this, you know. But an interactive broker is a little bit different. But let's try shorting one contract of futures to see what's the effect, the margin effect on my account. So I'm gonna right now, let's see, active trader. I'm going to sell, because right now I'm long one position, so I'm gonna sell two contracts to kind of close my long and be short one. Now, right now it is trending up, so most likely I'm going to lose money, but it's fine. Again, this is for learning purposes. It's not real money, so I'm totally fine with it. So, all right. So right now I submitted 2 orders, one to close it and one to short sell one contract of Bitcoin futures. So let's look at the margin count. And according to Thinkorswim, I guess TD Ameritrade, the way they see it is the same thing. So whether you're long or short, you actually only need to have around $7,500 in your account to do it, which is pretty nice, because I know interactive brokers is a little bit different. Now, interactive brokers, they're very, very conservative because they are afraid because of the volatility, the float, that it could be a huge danger to a lot of clearing firms, and brokers could have a lot of liability if somebody blows up. If, for example, a trader decides to short sell 5,000 contracts on Bitcoin futures, and all of a sudden Bitcoin futures starts to run and go up maybe 50%, 100%, they could literally blow up. And then you multiply that by maybe another 20, 30, 40 traders doing the same thing, and you could have again, you could have millions and millions of dollars in losses that most likely traders are not going to be able to absorb. So the clearing firms and the brokers are going to be liable for that. So it could be dangerous for them. So interactive brokers, because of that, they're a little bit different. I believe they actually require you to have, for every one contract Bitcoins that you're shorting, you need to have at least $40,000 in your account for one contract in futures that you're shorting. Now, for every one contract in futures, in Bitcoin futures that you're buying, you actually only need to have $9,000. So if you're long Bitcoin in the futures market, you only need to have $9,000. So it's a little bit different between shorting and buying. Just because, again, interactive brokers is afraid that traders who are not experienced in trading futures, who do not really understand what's really going on, who might short too early, may blow up, and that could happen. So that's the reason why they're requiring such a high margin, because that could happen. Traders could blow up, and when the traders are not able to meet those, to kind of pay for that, the exchanges, the clearinghouse, are going to be liable for that money. So that's the reason why the interactive brokers has such a high margin. Now there are some other brokers like TD Ameritrade or other brokers who do not require that, but again, I'm actually in favor of having bigger margins, especially when you're shorting, because it could get pretty dangerous. Keep in mind that Bitcoin is trading 24 hours, 7 days a week. So if you are in U.S. time, and let's say you go to sleep, and then again, Bitcoin could be traded in China and all of Asia, which when you're asleep over there, they're having their normal day. It could spike. It could double. It could go up 100% in a day. So by the time you wake up, you might blow up your account, lose all your money. So that's what they were afraid of. And I know I'm actually short buying Bitcoin, and I want to learn more about trading, shorting using Bitcoin futures. But now understanding the risks, it might not be a good idea. Because the risk could be pretty big, especially since Bitcoin is traded 24 hours, 7 days a week. And again, that could be pretty dangerous, especially if you don't have the right mechanisms in place to alert you when the price is moving against you in a quick way. So you have to be very, very, very careful in terms of shorting Bitcoin if you don't know what you're doing. So I just wanted to quickly bring that up because it's very, very important. Now, I'm actually going to buy Bitcoin right now because, again, this is a flag. This is wedge breakout. And again, this is all-time high. So again, this is the Bitcoin future. So right now, Bitcoin future says it's 1790.20. That it's going to end around there by January 2018. Right now, you have 72,300. So, all right. So it's almost equivalent between the futures market and the actual market. So it's about to hit to all-time highs. So I'm going to buy some more just to trade it, because this is what's a technical wedge breaker right here. So if you are a trader, you will understand this type of trade, this type of setup right here. So I am going to buy some more. Actually, you know what? I'm going to buy 5. Buy 5 Bitcoin. Delete. Edit. Again, I'm looking at it, and I think it could break all-time highs, and it breaks a new high. I think this thing could really skyrocket. So right now, all-time high on Bitcoin, and the let me see. Right now, all-time high in Bitcoin here in the GDAX exchange, it's around $17,428. So I believe it could break that by tomorrow. I'm just looking at the trend right now. If you look at the 5-minute, excuse me, 30-minute right here, you guys can see that right now Bitcoin is actually trending. It broke out of this wedge. Again, this is like a common flag breakout, and it's about to break all-time highs. So I'm definitely bullish. So you see that in the underlying Bitcoin, and now you see that in futures. So they're all supposed to move in tangent. So again, it kind of makes sense. So hopefully, you guys understand that. All right, so the next thing that I want to talk about. So looking at contract specifications, keep in mind that futures contracts and underlying trade different hours. So again, the underlying Bitcoin, the trades 24 hours, 7 days a week, different exchanges. You have a GDAX, you have Gemini, then you have Bittrex. Actually, you have a whole bunch, and I'm going to show you guys all the ones you have. So let me see, BTC USD. So you guys can see right here, you can see that Bitcoin USD trades in the Coinbase, which is DDEX. It also trades in Bitstamp, which is another exchange, It also trades in Bitfinex, is another exchange. It also trades in Cboe and Hit BTC, Wax, Ocoin, Mongox. Actually, Mongox went bankrupt a couple of years ago, and I'm actually surprised they're back up and gone and rolling. So you have all the exchanges that is trading Bitcoin. Now, some exchanges may have different prices for Bitcoin. It just depends on what's exchanged, but the price difference is very, very small. It could be a couple. It actually depends, but but it does vary. I know when it comes down to Bitcoin futures is actually traded based on the Gemini exchange. So whatever the Gemini exchange is trading Bitcoin, that's what it's based on. So you guys can see that. It should say right here. So see, COB Bitcoin futures cash settle futures contracts are based on the Gemini auction price for Bitcoin in US dollars. So that's the one thing that you have to keep in mind, that if you do trade Chicago Board of Options Exchange futures, it's going to be based on the Gemini auction price for Bitcoin. Now, just so you guys know, the hours of operation in Bitcoin are right here. From, for example, from Monday. So Monday specifically is open from 3 a.m. to 3:50 p.m. Now this is Chicago time because Chicago Board of Futures is actually in Chicago, so Central Time. Now Tuesday to Friday it's open from 8:30 a.m. to 3:50 p.m. Now let's look into extended hours. Extended hours Monday it's open from 5 p.m. Through Sunday to 8:30 a.m. Now actually, yeah, excuse me. Sunday the day before 5 p.m. to 8:30 a.m. Monday. Now Tuesday is open from 3:30 p.m. The previous day through 8:30 a.m. So right now it is 6:50 p.m. So it should be around 8:50 p.m. Central Time. So again, futures market is open. That's why you see this trending right now. So. So I want you guys to keep that in mind. So, so that's another thing I wanted to quickly mention. Let's see what else is another thing that I want to kind of bring up really quickly. So the Gemini exchange. Actually, let me see if I could find the Gemini exchange right here. Let's see, which one is the Gemini exchange? Let's see. See what the Gemini exchange says BTC is trading at. USD. Oh, that is weird. Let me see. Let me see. Bitcoin Gemini exchange price. Let's see if we can find something. All right, let's see what we can find here. All right. Switch registration. Menu. Auction data. Let's see what it says right here. Actually, let me look at marketplace. Order types. Actually, I'm just gonna forget this and I'm just gonna go straight to Gemini. So this is the Gemini right here, price. So right now, Gemini, it's stating that BTC is trading at $17,547, and this is BTC. I believe this is Bitfinex. Actually, let me see my portfolio. Bitstamp. So Bitstamp is saying it's trading at $17,200. So you see the difference? So in Gemini, it's trading like almost $300, 250 bucks more than in the Bitstamp exchange. So I want you guys to understand that, because that does make a difference. So when you are trading the underlying, make sure that you're looking at the Gemini exchange of Bitcoin price to really determine your futures price, because that's what it's based on. So hopefully that makes sense to you guys. So that's what I wanted to kind of cover. And I know it sounds like it might sound a little bit confusing, and again, my voice is not helping, it's not making things better. But again, just to kind of do a quick summary, one Bitcoin futures contract is equivalent to one Bitcoin. If you're buying through TD Ameritrade, you actually only need around $7,500 to actually buy one futures contract on Bitcoin. Now, in terms of expiration dates, that's another thing you gotta keep in mind. So if you do not buy or sell, let's say you buy one futures contract today, the contract is going to expire in January. So let's say settlement dates. It says that the final settlement date for weekly futures XBT or Bitcoin futures contracts is 2 businesses prior to the Friday of the week denoted by the ticker symbol. So let's say, I believe it's going to be in January. Let's see. Oh, actually, it's better. You guys see that right here? Days, 34 days. So, 34 days from now will be probably like I believe it's like the first. Actually, it might not even be the first Friday of the month. So let's see, 34 days. Look at the calendar really quick. So that's 7, 21, 27. Let's see. So I believe it's going to expire on the 12th. So it's usually future contracts expire on the Fridays. So I believe it's going to be around January 12th is when it expires. So if you don't, for example, let's say that you buy a futures contracts today, if you don't close your position, automatically it's going to settle in cash. So that's the nice thing about futures, buying a Bitcoin futures, that you're not going to get one Bitcoin. It's going to be settled in cash. Excuse me. So you're going to get cash instead of a one Bitcoin, which for some people, that's what they want. They want the cash instead of Bitcoin, especially institutional investors. They're looking for the cash. So I hope that makes sense. So that's pretty much it. Let's see what else I want to cover. So again, one Bitcoin future is equivalent to one Bitcoin. You don't need to have all $17,000. Again, for certain exchanges, you can have like half of it or less than half. Like TD Ameritrade, you only need to have like $7,500, which is pretty nice. What else? It also depends on what exchange and what broker you use. If you try to short Bitcoin contracts, again, interactive brokers may require a bigger margin. Like I said, for one Bitcoin contract, they want you to have at least $40,000 in your account, or buying power, I think, is in your account for them to allow you to short sell Bitcoin. And the reason why is because the huge risk and liabilities that you could blow up. So it's very, very risky for them, and they don't want to take the risk. They'd rather you have the money in your bank account before they allow you to trade that. So that's pretty much it. Let's see what else. And there's actually rules regarding trading halts. So it's all here. And one thing that I wanted to mention is that is very, very, very important, is that when you're trading futures contracts, especially because they're in a legitimate exchange, Chicago Board of Options Exchange. You got to keep in mind that there could also be halts, you know. So I know that doesn't happen at the GDAX or the other exchanges because there's no regulations, but in future and the Chicago Board of Options Exchanges, they're under regulations, so they have to meet certain regulations. So, for example, if let's see, if so trading futures contracts will be halted for 2 minutes if during regular or 10 trading hours the futures contracts do the best. So the best bid on the futures contract closest to expiration is 10% or more above the daily settlement price of the contract on the prior business day. So if it goes up more than 10%, or there'll be like a 2-minute halt. And if it goes down 10% or more, there'll be another 2-minute halt. Now, there will be a 5-minute halt if the contract goes up 20% from the prior day, or it goes down 20% from the prior day. So that's one other thing you want to keep in mind. So this kind of helps from like investors freaking out. You know, kind of helps give them time, investors, to kind of decide are they going to keep it or they're going to sell it. Because a lot of times when these huge moves in Bitcoin, especially if you're trading futures, some traders may freak out and may make the wrong decision. So when these halts are done, the reason why they make these halts is to kind of everybody to kind of relax, think about what's going on, and also to make sure prices don't get way up, to kind of manage the volatility. That's pretty much what they do this for. So the great thing about this is that hopefully in the future, after there's a lot of volume in the Bitcoin futures, this is going to allow for the underlying like Bitcoins to also manage that volatility. So the reason why Bitcoin futures is a good thing is because, for example, if you are a miner and you have a whole bunch of Bitcoin, let's say you have like around, let's say, 1,000 Bitcoin. You know what I mean? And you are afraid or you're worried that, you know what, I'm actually worried that if the Bitcoin may actually crash, and I want to protect myself and hedge myself of that, I'm going to short sell 1,000 Bitcoin in the futures market to kind of hedge myself against that. So having the opportunity to do that for somebody who has a large position allows them not to freak out and sell the underlying in the real market during panics or during quick sell-offs, because you have your opportunity to hedge using futures. So that's very, very, very important. So that kind of manages a lot of volatility. So it is good that there's futures. So that's one thing I want to make sure, that it is a good thing that there's futures contracts, because it will help manage volatility. Now, I am overall bearish on Bitcoin because of the chart. If you look at the chart again, let me show you the 1-day chart. You'll see that it's gone parabolic. So, but one thing that I want, they're doing a lot of extensive research and online and reading a couple things. I realized that around 40% of the Bitcoin out there in circulation is actually held by a very small amount of people. So what that means is that if these people decide not to sell, if these people decide to keep their position long, Bitcoin could keep going up and up and up and up, because that means that there's probably not going to be a lot of float, a lot of like Bitcoin being traded around. So that's a big deal, because when there's such a small amount of flow, a lot of Bitcoin out there, it means there's only a limited amount. So there's low supply, and then there's high demand. Guess what's going to happen? The price is going to keep going up and up. So at this point, even though the chart it is parabolic, I believe there's a lot of small players out there who probably will never sell their Bitcoin. It's a possibility. It's a possibility that they will never want to sell their Bitcoin. And that all is going to do is cause just the price to keep going up, 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 and up, and up. So it's a little tricky to short Bitcoin because the float is so small. There's only going to be 21 million Bitcoin out there, and it's believed that around 50% of it is owned by a couple players. So those guys, of course, have the leverage, huge leverage of when they want to sell. And because the demand is so high and the float is so small, let's say there might be only like, so right now, let's see how many. Let me look at the what the market cap is for Bitcoin. Excuse me. Let's see. So right now there's 16,700,000 and let's say around 17 million Bitcoin circulating. And let's say that 50% of that, which is around 9 million Bitcoin, is held by a couple number of people that don't want to sell. That leaves that around 9 million Bitcoin floating around available to trade. And miners, of course, are still mining to get more Bitcoin, but again, that's slowing down already. So keep in mind that miners, what they do, literally their job is to really keep the ledger. Keep the ledger of who owns what, and also to legitimize transactions and to make proof that transactions occur. That's their job. That's what they do. But in terms of mining Bitcoin, it's definitely slowed out. It's slowed down a lot. So there's really small amount of float out there, and that's the reason why the price of Bitcoin has gone up so much. So it's very hard to determine, so you pretty much have to do is look at the public ledger, which there is one actually. I'm gonna see top 10 Bitcoin wallets. Let's see what we get. Ethereum. Nope. Bitcoin top 10 Bitcoin. Top 10 richest Bitcoin wallets. Let's put it this way. All right, so these are the top 10 people. These are actually some of the people that own the most. Now, I do remember seeing a documentary, and I think this was around 2010, 2011. The Winklevoss brothers, the Winklevoss twins. I don't know if you guys know these. These are the guys who actually came up with the idea of Facebook, and they sued Mark Zuckerberg for stealing the idea. I believe these guys bought like 10 million, excuse me, worth of Bitcoin back in 2012, 2013. So these guys have a lot of Bitcoin. These guys are definitely Bitcoin billionaires. Now, in terms of how much Bitcoin they have, they don't want to disclose it, but I believe they have a whole bunch. I believe these guys are one of the biggest players. There's also these guys right here, and of course Satoshi Nakamoto, who we don't know really is. And actually another one that says Uncle Sam, which is the government. The U.S. government may actually also hold a big position in Bitcoin, which we don't really know, but it is possible. But let's see. Let's check this out. Okay. Yes, here they are. So this website, Bitcoin for Shards, kind of shows a ledger, the top 10 richest Bitcoin wallets addresses. So this address has around 133,000 Bitcoin, which is around $2 billion with the Bitcoin. So you guys can see Bitcoin, in terms of who's holding Bitcoin, is highly concentrated. And it shows right here how number of outs. So they literally sold 3,476 Bitcoin. So not a lot of it has been sold. And again, they still hold 133,000, over 133,000. So 32 out, 49, 89, 1. So actually, this guy sold a lot of Bitcoin, about 4,000 Bitcoin. This guy sold 100. So these are the top, Bitcoin wallets out there. Now this is their I believe their wallet key or their wallet ID or whatever. So if you guys could see, it's definitely concentrated. It's concentrated wealth. There's a small amount, and keep in mind that one person or one organization could have more than one wallet. So a lot of it is concentrated. So it's not recommended. I've actually, after doing my research, it really isn't recommended to short sell Bitcoin because of such amount of high concentration. And not until we see the numbers, who's selling the underlying. Once you start seeing like huge amounts of sell-offs in the underlying, and you're able to see that in the chart and also by looking at these wallets, and that's how you're going to be able to know that who's dumping their position. And this is the best way to know because again, futures are based on the underlying, so you want to know what the underlying is doing because that's going to affect the futures market. So that's the most important thing. So again, there's a huge concentration of Bitcoin wealth right now, in the amount of very, very few people. And right now they're holding, they ain't selling. And not until they start selling, we might see a reversal in Bitcoin. But right now, to me, it looks like these guys are holding. Look, only 3,400 have been sold, and this guy still has 133,000. Or it might be an organization. Excuse me, it might be an organization. Now this wallet is the Bitfinex exchange, which is an Asian exchange. So it's got to be somebody in Asia. It might be an organization in Asia that has that amount. So they have around actually $2 billion worth of Bitcoin right now. This guy has $2 billion too. So it's an insane amount of wealth concentration. So that's the reason why I am not shorting, because there's just too many people who have such amount. I mean, pretty much because the large amount of concentration in Bitcoin is in such a few hands. If those people decide just to stick with it, don't sell, Bitcoin could go insane. And I know a lot of people have saying that Bitcoin could go to 25,000, could go to 30,000, 40,000. There's some people saying it could go to a million. I think Bitcoin could definitely go above 20,000 for sure, if the large holders of Bitcoin do not sell. Now, what these guys could do now, for these guys that hold such a big amounts of Bitcoin, in order for them to hedge themselves in case of a fall, now they got Bitcoin futures. So they could short Bitcoin futures to hedge themselves in case the price of Bitcoin falls. So now it's actually a good thing for them, just so you guys know. Now for the average investor, like somebody like myself, shorting Bitcoin is actually not a good idea because it might actually cause a short squeeze, a very, very big short squeeze. Because again, such amount of concentration is held in very, very few people, and from what it looks like here in this wallet, it doesn't look like they're selling. It looks like they're keeping it and holding it, and they're holding tight. And now they have a futures market where they could hedge themselves in case there is like a sell-off or something like that. So that's something I wanted to mention really quickly because that's very, very, very important. There's such a there's a very, very small amount of, I guess you could say, float. Again, right now there's only around 17 million Bitcoin traded around, so there's really not that much. And again, the major holders the people who are holding the most of it are not selling. So I really believe that Bitcoin, just because of looking at the supply and demand, it could definitely keep going up. So it is definitely very scary to short sell Bitcoin using futures because, for one, the people who hold the majority of Bitcoin are not selling. Um, and that could definitely cause a big, humongous short squeeze for those who start shorting early in the futures market. So what I decided to do, and something I'm looking to do, I might actually trade crypto, but I might actually look into more, trading, swing trading, Ethereum or Ripple or Litecoin. Um, is a swing trade, but not shorting them. Actually, um, I may short them, but not, of course, not using the futures market. But I may short them like a day trade, not a swing trade, but more of a day trade. I may short the Ethereum or Ripple in during the time that I'm awake, because again these cryptocurrencies are open 24/7, but I may day trade them during certain times of the day instead of shorting Bitcoin using futures because it's definitely very dangerous, absolutely very very dangerous because of how much of the concentration is actually kept in a very 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 small amount of people. So very very small, very very small. They say around close to 50% of all Bitcoin, which is insane. And again, those guys are the ones that have control of the market. So, and again, it doesn't look like they're selling. So hopefully that makes sense. All right, guys. So I know this webinar was a little slow. And I do apologize. Again, I am sick, but I try to do my best. Now, next webinar, I kind of do want to cover swing trading cryptos. Again, trading is based on supply and demand and is based on psychology. Similar type of setup that you see on cryptos, or a similar type of setup you see on stocks. Because again, it's all based on supply and demand, which is the same thing. So I do want to kind of cover that hopefully next week, so you guys can learn something. So again, shorting Bitcoin futures is very very risky, and again, it's very dangerous because the amount of wealth concentration is in a very very small amount of people, and it doesn't look like they're selling out. They have too much, and I really believe that Bitcoin could definitely go up to like 30, 40, $50,000 of Bitcoin. I know it sounds crazy, but looking at all these large amount of with Bitcoin and just a small amount of wallets, it's kind of scary, man. Shorting Bitcoin, definitely don't recommend it. Maybe it's a day trade, but not as a swing trade, because you could short Bitcoin's futures and go to sleep and wake up and your account is blown up. So definitely not recommended. So hopefully you guys learned something. And again, any questions, you guys are welcome to ask me. And let's see, actually, have any questions? Not actually. I will answer those questions the next time we have another webinar. So hope you guys learned something. Have a good one, guys. Bye bye.